time we are in calls for innovative means of doing things. That's why we find the need to meet on this platform. The Chamber of Agribusiness Ghana is highly grateful and pleased to have distinguished guests to grace this occasion. They are Professor Godfrey Bopkin, Senior Lecturer, School of Business, University of Ghana; Mr. Andrew Ahiaku, Head of Banking Sector, Asley Africa, Kenya; Mr. Fertis Miller, Governance Advisor on Food and Agriculture, Tony Blair Institute for Global Team; and lastly, Mr. Naliban Ujangi, CEO, Agric and More Limited, Ghana. We hope that this meeting will be interesting and beneficial to all and sundry. Once again, you are warmly welcome. Thank you.
Thank you very much, Eben.
Okay.
Eben is one of our team members with the Chamber of Agribusiness, one of our volunteers. We would like to call on the CEO himself, Mr. Anthony Mox, first opening.
A very good morning, everyone. Thank you very much for this opportunity, Dr. Kwejo Ahiapa. I must say that this is a very unique opportunity for us as a private sector people, stakeholders, value chain players, to actually come to understand what is required when we're talking about the distractions that the COVID-19 has brought into our activities. I wouldn't want to talk too much, but first of all, I want to appreciate the immense support of GIZ MWAP for giving us the needed support to be able to host this all-important webinar. I also want to acknowledge MOFA, Madam Angela, who is the director for MMPPD and the chief director. I also want to acknowledge the importance role that has been played along the line by our various speakers, especially Professor Godfrey Bopkin, Andrew, and Naliban himself, and also Fetis. This program will give us a deep understanding as to what we expect and how we can leverage on the various distractions to be able to put together a very strong and a robust agribusiness sector economy. We are in this economy, and many others have acknowledged that we are in the new normal, and the new normal requires something like this: an interface between the goods and services all on a cyber platform. And I'm sure many years to come have this cyber engagement. The agriculture sector in Ghana, having seen much of strategic efforts with regards to the COVID-19 emergency actions. But I believe that this platform will then again serve us as another impetus for us to influence government decision and also to collaborate with development partners and all multinationals and the private sector most especially, to deepen the PPP and the local content aspect of what we do and to make our industry once again very robust. I welcome everybody, and I appreciate all your efforts. Thank you very much, and a very good morning to everyone. Thank you.
Thank you, Mr. Morrison. Welcome once again. Like to get straight into the first section. So two of our speakers will give their input. After that, we'll have a Q&A section. And for the meantime, while the talk is going on, while the education is going on, if you have questions for them that pop with a point they raise, please quickly type them in the chat box, or amplify them to the speakers to respond to them specifically for you. We would like to welcome our speakers for today, Professor Bopkin, Mr. Andrew Ahiaku, Mr. Fertis Miller, and Mr. Nalban Wonjaji. Our speakers, you're warmly welcome. I want to take this opportunity to especially acknowledge your presence and to say thank you for accepting the invitation to assist us in this webinar. So without much ado, I'll call on our first speaker, Prof. Before I hear, please take over to start with this first section for us. So let's welcome Professor Bopkin.
Thank you. Good morning, everyone. It's a bright day. It's a beautiful day. It's certainly an opportunity to make an impact. And let me express my appreciation and gratitude first and foremost to God who has kept us and preserved us in the midst of COVID-19. Certainly, God is not ignorant of what is going on, and He hasn't lost control. He is in charge. To that extent, we thank Him. And thank you, More Anthony, and all the organizers, and also you, the participants, for making time so we all share ideas and advance the frontier of knowledge, particularly in the area of agriculture and agribusiness, as we seek to take advantage of the opportunities presented to us by COVID-19. It is not all weeping. There is some opportunity as a result of COVID-19. And I believe whilst we keep an eye on the downside threats, we can also scale up in terms of taking advantage with the opportunities that come along with it. So before I would like to project my slides very quickly and then go straight into the discussion. And of course, we all can make input. We all can make suggestions to improve it as we go along. There's a lot out there that you know that I can also tap into as we all discuss collectively in exchanging ideas as iron sharpened iron. We are all aware that as a country, like many other countries today, we have moved from the first stage of the reaction or the response to COVID-19 to the second stage. And 3 stages have been identified. The first stage has to do with the containment that were institutionalized. Some of them involved lockdown, social distancing, a number of those interventions that we did. The second phase is where we have decided as a country to live with the virus, whether we like it or not. That is where we are now. So you realize that as a country, our strategy has changed from where we prioritized saving lives that came along with the strict containment arrangements like the 3-week lockdown of Greater Accra and Greater Kumasi. Of course, the economic implication of that is clear for all of us. And even not only in Ghana, but other countries that have done similar lockdowns with the extended versions have recorded greater economic impact. A good example will be Singapore, that has seen a sharp contraction in their GDP, plunging them into some kind of recession. The second phase is where we decided to save lives and save livelihoods at the same time. In other words, we have decided as a country to live with the virus. With that strategy, it's impossible to come out of it unhurt. So it involves some kind of trade-off. So you open up the economy to live with the virus. Now, that strategy is only effective to the extent that the immune system of the population is very strong. That way you can live with your enemy. If you understand your enemy and you know how to cope well with your enemy, you can easily live with your enemy. We are told in the last 2 briefings by the president that we can boost our immune system by consuming local products. He talked about contumely and those things. Certainly, that does not take us to the domain of health. That straight away puts us in the domain of agriculture and agribusiness. Our eating habit holds the key then to our immune system as we decide to live with the virus. To that extent, agriculture and agribusiness then becomes fundamental and should be a pillar to the economic recovery we are all hoping for. Of course, that is not to say we should neglect the critical health spending, but we know that the containment measures that were put in place have had more devastating effects on our lives than the virus itself. And to that extent, we are not only in health crisis. So there's a need to have a delicate balance between prioritizing health spending and also spending appropriately in the area of agriculture and agribusiness as we boost the immune system of the population and make sure that hunger does not kill ahead of the virus. My presentation will look at COVID-19 basically and the impact on the economy, which we have looked at. We look at agriculture and agribusiness in pre-pandemic times, agribusiness financing challenges and the opportunities in there, and then some kind of recommendation going forward. As the earlier speaker mentioned in terms of the introductory remarks, that the impact of COVID-19 is there for everyone to see. In fact, it's one basic development in our world today that does not require you having a PhD in economics to understand the impact, because the impact is pervasive and it cuts across the entire society, and it doesn't exempt any institution or sector, whether it's health or finance or agriculture or even religious bodies. Churches have not been spared either. So if you look at the impact, and so far our attention has focused on other areas, but if you look at the impact of COVID-19 on the religious bodies, institutions, is huge, because the churches and the other religious bodies also run some quasi-businesses, health institutions, and all of that. Again, when you do a lockdown, it puts a disproportionate impact on the vulnerable in our society who must step out every day before they can earn a living. But to the well-to-do, they can prioritize health because they have enough deep freezers and fridge to store enough food for the next 3 weeks or 3 months. But for the average poor in our society, they actually don't even have a fridge to even have anything in it. If they don't step out, they are not eating. We have seen the GDP contraction. We have seen the fiscal losses in terms of government revenue envelope. Over 5 billion cedis has been lost because of COVID-19 in our petroleum revenue receipt envelope. And that is huge, and that has implication for the programs and expenditures that have been earmarked to be funded from the oil revenue. When it comes to other important tax handles, the losses are obvious. So far, preliminary estimates suggest that over $200 billion is being lost by way of income losses in Sub-Saharan Africa alone, and that is very huge. And I want to say that given the fluid nature of COVID-19, no one is able to get it right. Since January, the world-known institutions like the IMF and the World Bank and the UN Economic Commission and all of that have had to revise their projections more than 3 times in the first half of the year alone. That tells you that the situation is very fluid. The strategy that worked last week is perhaps a recipe for disaster the following week. That is how fluid the situation is. COVID-19 has elevated the inequality in our society, and the vulnerable are bearing a far greater proportion of the adverse distributional effect of COVID-19. We have had to scale up on health spending. The government has put in place fiscal and economic stimulus arrangements as enabled by our limited fiscal space. The efficiency of that we can talk about some other time to come. So there are real challenges, job losses. When output contracts sharply the way we have seen, then it means that you will require less input, and labor is one of the inputs in the production process. So it is expected that job losses has come to stay. So people who have lost their jobs, it is not expected that they can even pick it up in the next year or so. And the reason I'm saying so, and it's the reason why we have to be prudent with our spending on our savings, so that once you exhaust your savings, your buffer, credit card balance, and all of that, you have practically joined the vulnerable group. So Ghana, for instance, we are not expecting a quick V-shaped recovery. No, we do not have the fundamentals to be able to aid the recovery as fast as other developed countries like the US, UK, and the others who have better fiscal space to do so. So in other words, we are in for a long haul, and it's a reason why we need to tighten our bets. So if you lost your job early part of this year, it is not our understanding that you can get it back by the end of this year or next year or in 2 years. Ghana's economic recovery from our preliminary estimate will take us more than 3 years. Will take us more than 3 years. And the next important question will be, what kind of economic recovery do we want that Ghana wants to have? Are we going to have the same jobless growth that we have seen in pre-pandemic times? Certainly not. What we are advocating, and for which reason this seminar couldn't have been better timed than this time, is that we are looking for people-centered economic policy recovery programs where people are at the heart of the policies. So we go beyond the usual talk of GDP this, GDP that, and all of that. Then talk about how those policies would directly have a demonstrable link to the lives of Ghanaians. Because the growth that we have seen in the last 3 decades have not reflected in the lives of ordinary Ghanaians. We have seen economic growth that left behind a larger proportion of Ghanaians. Okay, and there's nothing national about the national cake. It is only a theoretical word. Not many people can demonstrate their link to the national cake. We must reverse this post-COVID-19 and make the economic work for ordinary Ghanaians. This is the direction we are looking at. And as I go on, I will demonstrate why agriculture and agribusiness is the one important means of demonstrating that people will be at the center of the next economy we are going to build. We have also seen dwarfed remittances and increase in poverty because of COVID-19. And why am I saying this? Because if you look at employment dynamics in Ghana, more than 60% of Ghanaians employed are in the agriculture sector, mostly in rural agriculture. And they have gone into that kind of employment as a last resort. And almost all of them are underemployed. Now, we have seen from the late 70s, because of the rush and the lack of appreciation, we bought into expensive IMF World Bank-led economic recovery programs in Africa. You can talk about the structural adjustment programs with a financial sector component called the Financial Sector Adjustment Program and all of that. I want to submit, and evidence support that whilst those programs made some gains, they were more at the macro level. The gains made in the last 3 years did not reflect in the pocket of Ghanaians. So as a reaction, we developed the same IMF World Bank push on our throat again poverty reduction programs, anchored also by the Millennium Development Goals. And we are told that the Millennium Development Goals actually halved poverty, particularly in Sub-Saharan Africa and all of that. But the evidence today is that those gains that were made have practically been reversed because of COVID-19. And more than 27 million Africans, majority of them in Sub-Saharan Africa, are falling into poverty because of COVID-19. As we speak, even in pre-pandemic times, 6 people fall into poverty every 60 seconds. So you can do the analysis yourself, that if in pre-pandemic times, 6 people fall into poverty in every 60 seconds, you can imagine the exaggeration now. And since we started this program, you can count the number of people who would have fallen into poverty and how many people would have fallen into poverty by the time we are done. So we have a big challenge on our hand that requires innovation and people-centered approach in our post-COVID-19 economic recovery. Some statistics here in the agriculture sector, which plays a key role in agribusiness as well. So you can see in terms of sectorial composition of Ghana's GDP, you can see that agriculture has lost the leading role. Okay, from independence running all the way to the 60s, 70s, agriculture was the main contributor to GDP. Particularly with the introduction of oil in 2011, the composition of our GDP has changed. Of course, that composition and transformation has offered very limited job opportunities for Ghanaians. So now we see industry and then we see service rather leading. But Ghana is not known for service. We are not known for service. Let's not kid ourselves. We are not known for service. And if you look at service and the subcategorization, Ghanaians play very little role in that area. Take the financial sector alone. In terms of insurance and all of that, Ghana has practically lost control. We've lost control of that sector to foreign players. So if you look at our economy today, even though we have seen positive GDP, that GDP does not reflect in the pocket of Ghanaians. And it's also because of the subsectors that are driving the GDP growth. Because when you find that agriculture has lost its leading role and the growth in agriculture, which I'll demonstrate very soon, is also dwindling, then it tells you that once majority of Ghanaians derive their livelihood from agriculture, agribusiness, and that sector is not doing well, that also tells you that majority of Ghanaians are not doing well, because the sector where they derive their livelihood from is also not doing well. But the sectors that are doing well are heavily dominated by foreign players. And it's the reason why we see growth here and we don't get to celebrate it. So Ghana's economy is almost like a factory where we pound enough fufu for others to go and eat. So if you look at investment in the industry that is doing well and service that is doing well, the investment is coming from foreign investors. And the return on capital is so huge over the last 3 decades, whilst return on labor supplied by Ghanaians locals is very, very small. To that extent, we don't get to retain a sizable portion of the growth dividend. This is Ghana's problem. And we don't need a prophet to tell us we need to correct this. Now you can see the growth in agriculture over the years. 2014, agriculture sector growth 0.9%, 2.3%. You can see that across the various years. But you can see that agriculture picked up some way, somehow in 2017. And the reason is simple. Sorry. The reason is simple. It is because of the planting for food and jobs that government decided to implement in 2017. And that also caused spending in agriculture to increase. And once the spending increased, we saw that agriculture sector growth also inched up to 6.1%. Since then, the funding in that sector has declined, and the growth has also followed in that same trajectory. And that is why the topic for this seminar is fundamental: financing. Because there's a demonstrable link between scaling up financing or investment in agriculture sector and agriculture sector growth. So it means that it's within control, largely. It's within control. Now, since the topic is about financing agribusiness to improve livelihoods, there's a demonstrable link in literature that agriculture offers the direct link to improve livelihoods in Ghana and Africa for that matter. So if you look at this table, for instance, you see output multiplier and the various sectors. You will see income multiplier, you will see employment multiplier. Now, you look at the first one, which is agriculture. So in terms of agriculture, in terms of the output multiplier, agriculture is not the leading. So because you can talk about mining, which is here, you can talk about electricity, gas, and steam. You can talk about water supply and then sewage. Fine. In all of this, we don't have control also over this because output is not necessarily what is in your pocket. But let's look at the income multiplier of the various subsectors. You'll find that agriculture has the highest. So you see, in terms of income multiplier, agriculture has 2.9%. In terms of an uptick. Again, in terms of employment multiplier, agriculture has the highest in this country. So what it means is that to improve lives of ordinary Ghanaians, and lives here we can proceed by income. Okay, others can also proceed by long life expectancy and all of that. But income plays a very key role. So if you want to scale up the income of ordinary Ghanaians, then agriculture has the highest multiplier effect. And if you want to talk about employment generation in Ghana, the most effective means of creating employment in this country is agriculture and agribusiness. This is what empirical data does for us. And empirical data then should feed policy formulation and direct resource allocation by government and also the private sector. So agribusiness has a very large multiplier effect, 1.8%. And agribusiness creates over 750 jobs with every $1 million output. So if we generate an output of $1 million in the agribusiness, it comes along with 750 jobs. And now I'll tell you why Ghana cannot cry anymore. Because the food deficit in Africa is over $35 billion. And the food deficit in Africa represents over $50 billion worth of investment opportunity for us in Ghana. As we have signed up onto the African Continental Free Trade Agreement, that means that the food deficit, whilst it's a challenge for Africa, is an opportunity for Ghana to take advantage of. And when we talk about food production and food processing and linking that to agribusiness, this represents a low-hanging fruit for us. So within 6 months, 1 year, we can actually fill that gap, and that is huge business for us. So if $1 million can create 750 million jobs, what will happen if we're able to do, even let's say $1 billion? So if you do $1 billion, that tells you the number of jobs that can be created. You know what? You don't need a prophet to prophesy on 31st December that this is the way to go. There's empirical data to tell us that our own future is at the end of our own arm. But we all understand that agribusiness is not the same as agriculture, but there's a link in that space. And that is the way we need to go, particularly in improving smallholder farmers who produce more than 70% of the food consumed locally. Then we can scale up the employment and income generation of those people. In addition to the earlier statistics, I want to put across that agriculture sector has the highest inequality reducing effect among all the subsectors in Ghana at negative 0.41 to a cedi spend or whatever amount spent. So that tells you that if we want to narrow the inequality and drag millions of Ghanaians out of poverty, agriculture is the salvation. It's the only way and is the practical way. So agriculture can lead the recovery. But we may decide as a country that we don't want agriculture to be the mainstay, but it's a good starting point. Just as the Bible says that man does not live by bread alone, the admission is that bread is a good point to start off. So agriculture Africa has food nutrition deficit that Ghana can take advantage of, particularly also because we have signed on to the African Continental Free Trade Area, and we should be able to take advantage of that. These are the low-hanging fruit for Ghana that we can take advantage of. So Ghana has a better comparative advantage in agribusiness, given the vast expanses of arable land, fresh water that we can use. And if you look at the European Union, Canada, US, and the rest of them, typically, if we're able to meet all the conditions, they tend to value the kind of agribusiness product that comes from Ghana, or agricultural product that comes from Ghana. Now, why COVID-19 is a game changer for the agriculture sector? The pandemic-induced runs on food, evidenced by inflation, opens opportunities for agribusiness and agriculture. And we should be able to take advantage of that. As we speak right now, 820 million people globally go to bed hungry. Whilst it's a challenge and it's a negative news, that is business opportunity. More hungry people, go feed them, and you are in business. 2 billion people are overweight due to imbalances in food. This is opportunity. Let's produce that. Let's do value addition. Let's open up the entire value chain, and we are in business for the future. Our going concern will be secured. Africa imports food in excess of $35 billion annually. Colleagues, why should we sit down and be in Africa where we have signed up for the African Continental Free Trade and report news like this, that Africa collectively imports food? Means that we are unable to feed ourselves as a continent. Meanwhile, Africa has more than half of the world's arable land and freshwater bodies. We have more than half of that. Why should we be importing food like this when we are told that with an output of $1 million USD, $1 million, 750 jobs can be created, and you have a huge food deficit of 35 billion. Why aren't we producing? Why can't Africa feed itself and even think about feeding the rest of the world? and Ghana should be able to take advantage. I want to submit respectively that what COVID-19 has done, even to our neighbors, is a big opportunity for Ghana. As we speak right now, 45 million Nigerians are heading to food and nutrition crisis because of COVID-19. That is more than Ghana's population. And we are talking about our neighbors, Nigeria. This is investment opportunity. This is what Ghana as a country should engage our attention that how do we take advantage of this? Ghana's neighbors, Togo, Burkina Faso, etc., could soon be depending on Ghana because of the impact of food, the Sahel, the crisis, the army worm, and all of that from Niger and all of that. If we are not careful, we are likely to see more of south-south migration simply because of food crisis. So we saw during the lockdown that people were crossing from Togo, from Burkina Faso into Ghana, maybe to have better health services and all of that. What it means is that when you are surrounded by neighbors who have food deficits and you have arable land like Ghana has, why should we be importing vegetable from Burkina Faso? Which theory can help us to understand that? So demand for food in Africa far outweighs food production. If you look at rate of population growth in Africa and you look at rate of food production, there's a gap. There's a negative gap that we can close. And Ghana should be thinking of taking advantage of that. 1 in every 4 persons in sub-Saharan Africa is malnourished. So the African food import represents an annual 50 billion investment opportunity that Ghana can take advantage of. What are the challenges in terms of agribusiness financing? And whilst I talk about challenges, I want us to look at them within the context of it being an opportunity also. Because I've told you the opportunities. And in standard finance literature, investment decision precedes financing decision. So what we have is the opposite of what Japan and the others have. They have financing, but they are lacking investment opportunity. We have huge investment opportunity, and we lack the financing opportunity. But it's easier when you have opportunity, you have investment opportunity to take time to arrange for the financing. So we have better leverage, making progress than the developed and advanced countries today, because they have limited investment opportunity, whilst we have huge investment opportunity, but the financing constraint. The reason is simple. The regulatory environment needs to improve. The regulatory environment is not so conducive to private sector investment in agribusiness in Ghana. And that is a challenge to private sector involvement in that sector. Only 1% of the commercial lending is directed to agriculture in Africa, and Ghana is not an exception. Financial institutions are reluctant to accept the risk prevalent in agriculture sector, such as drought, flood, pest, diseases, and all of that, and the high transaction cost. These are things that we need to be able to address. Because for the banker, if you lend to a farmer, the risk is very high, because the farmer, on his way from farm, something could swallow him. And then that is it. So for that reason, they wouldn't want to lend to the agriculture sector. We need to improve the regulatory environment. We need to do some kind of pooling, risk pooling, and all of that to make that sector a little bit attractive. In any case, given the low savings rate in Africa and Ghana for that matter, the limited financing available, the other critical sectors like industry and service are competing them away. So what is the incentive for a bank to lend to somebody, a farmer, when somebody in the import sector is looking for that same money? This is what is happening in this country. The higher interest rate is a sin to agribusiness growth. It's not just a challenge, it's a sin. Colleagues, if somebody goes to a bank to go and borrow at 30% to do agribusiness, to go into agriculture, you have to be unique to break even. Let me ask you, what kind of business can you do in Ghana such that your margin can be more than 30% to just meet the cost of financing alone? Meanwhile, to go into agribusiness, you require more than finance input costs. You need labor input costs, finance input costs, physical infrastructure input costs, digital infrastructure input costs. Please, this does not constitute enabling. When Ghana, we are talking about enabling environment, it's about time as a country we define what an enabling environment is. For us in Ghana, what is it that constitutes enabling environment? Enabling environment cannot be an interest rate of 25%. It is impossible. Look at the unreliable power supply. Look at the huge traffic. Look at data costs in this country. How do you do business and survive in such an environment? We need to be practical, and we need to sympathize with businesses, particularly in the agribusiness and agriculture sector, and make sure that lending is supportive. And when we are talking about supportive lending, it's not just the amount. It's about the tenure of the amount also. And also it's about the cost. And also it's about the collateral arrangement that goes along with it. In the agribusiness, the investment in that area may take roughly 2 years to mature. But sometimes in the banking sector in Ghana, you will not find a loan with a maturity of even, let's say, 1 year. Not long ago in this country, the average maturity of lending in Ghana was just around 12 months. That kind of lending cannot support agribusiness. It can only support import, where they import finished product within 6 months or so, they've reversed the transaction. And that is why the banks, it's easier for them to lend to those businesses than agriculture and agribusiness. We need to correct that. Again, apart from the private sector lending, government-owned lending to agriculture and agribusiness has not been impressive. Okay, so if you look at what Ghana signed onto in terms of the comprehensive agricultural program development, which says that a minimum of 10% budgetary allocation should be made to that sector, which will guarantee a minimum growth of 6%. We have averaged just less than 4% over the years. And this is not encouraging. What are my recommendations? We need to scale up agricultural spending, not as a favor, but as a necessity, and link that to agribusiness. We need to open up the entire sector and need value chain to Ghanaians and the private sector. The private sector cannot go into agribusiness to do us a favor. They are not NGOs. So if they see a better opportunity in industry or in the oil sector, why would they lend to agriculture as a favor? Because they have taken deposits from people and they cannot use their money to do anybody a favor. We must package that sector to make it a bit more attractive. And government must scale up investment in that area as a signal effect in order to encourage the private sector to plug in. This is the way to go. And we have seen that all over the world. We have seen the role that government spending plays in private sector growth opportunities. Even in the ICT sector, in the US, in Japan, you can understand the role of the state in influencing private sector activity. If you look at the pressure being brought to bear on UK in terms of the participation of Huawei in the 5G, you see the role of government, even US government, their influence on UK and all of that. So it means that government has a very direct and demonstrable role to play in scaling up the opportunities in agribusiness that can also offer a signal effect for private sector to feed in. To this extent, it is only user-friendly to talk about setting up an agriculture sector investment fund with private sector involvement. We have to be deliberate about that, and I'll demonstrate how that can be done. We need to deepen and quicken legal, regulatory, and administrative reforms in the public sector to improve efficiency and service to the private sector, particularly in the agribusiness value chain. A very corrupt public sector represents higher costs in the interaction between the private sector and the public sector, and we need to do away with it. The bureaucracies and all of that represent higher productive cost base to doing business in this country. We need to address that. We need to transform agriculture and open up agribusiness opportunity for Ghanaians and beyond. Because the understanding is that more 2/3 of non-oil manufacturing actually depends on agricultural products. So that's the way to go. Banks can complement the traditional collateralization of loan with innovative forms and all of that. So it's important that banks also play their role. And this is very, very important, particularly with appropriate risk management mechanisms to mitigate the risk inherent in that particular sector to make finance work for the poor. One of the things we can do, it may not be that popular, but sometimes in crisis moments, it's not every decision that must be popular in order for it to work. We must understand the impact of COVID-19 because in crisis moments, some people gain whilst others also lose. So if you look at what is happening right now, we need to have a better understanding of the impact of COVID-19. Who are those who have gained from the crisis? And a good example would be the ICT. As people have developed coping strategies, now we do webinars, we do online lectures, online work-based environment, telework environment, and all of that. The oxygen for that is data. So the traffic then is in the doorsteps of the ICT companies. So the expectation is that their profit will grow this year. To that extent, it should be possible for us to impose a minimum windfall tax on the big gainers from COVID-19 and use it to finance agriculture and agribusiness. In other words, those who gain from the pandemic, not that they cause it, must be able to put a lot more on the table in order to aid the recovery. Public-private partnerships must also be involved in this arrangement. Thank you very much for your attention. I'm very grateful. God bless you.
Thank you very much for that insightful presentation on how we can scale up financing in the agribusiness sector and how policy shift can also change the narrative for the betterment of the sector. We are most grateful. So we'll take the second speaker, then we move straight away into our Q&A, then the second session can start. So Mr. Andy Ahianku, if you are here, please can you take over? And you have 20 minutes to do the presentation. And please be checking your private networks because I'll be alerting you with the time as well so that we can keep to time. Thank you very much.
Thank you, Kojo, and thank you, Prof, for the insightful presentation. In fact, in a typical Ghanaian parlance, I would have said Prof has done an excellent job, and so let's just pack and go home. However, I need to just add some few insights to what Prof has already said. I'm going to be, in the next 20 minutes, sharing some insights or strategies for harnessing pandemic-triggered opportunities for the agri sector. Unfortunately, I'm working from home. There is some construction work going on in my flat, so pardon the background noise. According to the FAO, funding and investment opportunities are scarce and low in sub-Saharan Africa, and Ghana is no exception. Prof just mentioned, and data supports that the sector attracts less than 10% credit in spite of the immense GDP contribution and the employment effect that Professor Bockwin spoke about a while ago. In a Dalberg and KFW 2018 report, it revealed that the funding gap for agriculture in Africa alone is $100 billion. So if that were the case, then why is the picture that has been painted by Prof, which everybody around the table agrees to, why is it that agri is not attracting the needed support? And Prof mentioned that it is as a result of the perceived risk. But I will go a step further to add that the risk is not only perceived, but it is real. In a 2018 research by the Kenya Bankers Association, they argued that the risk-adjusted return on lending to agriculture is not profitable. Again, in another research by my organization, which is Aceli Africa and Dalberg over a 2-year period, it came to light that lending to agri, especially the agricultural SMEs, is 2 times as risky as compared to other sectors in East Africa. And on a portfolio basis, financial institutions make an average of a 4 to 5% loss on lending to agricultural SMEs. This has been attributed largely because Either the banks do not have the capacity to appreciate and lend profitably to the agri-SMEs, or the private sector hasn't got a capacity to be able to lend profitably to this sector. And this is supported by a report recently published by FAO in June 2020. Given this background, that banks are risk averse in spite of the opportunities, etc., COVID-19 and other related pandemics have worsened the already bad situation. So now there's decrease in confidence amongst lenders. Credit opportunities to agri-SMEs is limited. The resultant effect of all this is there's reduced food security. Farmers did not get input on time as a result of movements and restrictions put around Africa and Ghana for that matter. Labor was not available, demand for crops dwindled, and generally output for agriculture declined. But that is not all. The pandemic has also brought about opportunities. It has taught us that we can do things in a different way, in a different manner, and in a different form. The pandemic is telling the agri-food industry to have a rethink. In other words, to create opportunities for economic, social, and sustainable growth. What are some of these opportunities? From the financial perspective, or from the financial institution perspective, the pandemic has taught the banks that they can collaborate and indeed work better in partnership with telcos and other agri-tech entities, the likes of AgroCenter, MFarmPay, and our own Isoko. So going forward, it should be possible for banks to support agricultural entities and agricultural SMEs, but not necessarily visiting those entities. You could rely on partnership with telcos and technology-driven entities. What this means then is it is going to lower the cost to serve the agricultural entities and to some extent bring down interest rate, which is one of the things that Prof alluded to. Beyond collaboration, especially in East Africa, one of the things that came in the wake of the pandemic was the cancellation of orders, especially export-related orders in the coffee, tea, and largely the floriculture value chains. So in Kenya, where cat flour is big business, most of these orders were either directed to the European market and the Far East. But when Corona came, all this went down. The export sector suffered heavily, but the food subsector gained. So whereas export was down, food crops or local production went up. So as a bank or any financial institution should be thinking about tweaking its model. It is no longer sexy, to use the, maybe for want of a better word, it is no longer appropriate to rely on only financing export and cash crops. If you do that, you will be found wanting in the day of a pandemic. So banks should be tweaking their model now and be supporting food crops, supporting production, because although the export sector was impacted and cut, food crops like cereals gained because people have to eat, people have to feed. Another area that can be harnessed is building functional linkages for agri-SMEs. Most agri-SMEs, especially in Ghana, have relied on value chain financing. That is getting input credit from their suppliers, they produce, and then they also pass on to an off-taker. Most of these relationships largely have been based on trust. But in the wake of the pandemic, when people are hungry, when there is liquidity challenge, the resultant effect was there was breakdown in trust. Most of the SMEs and smallholder farmers took to side selling. What this has taught us is to strengthen the linkage along the value chain and build a sustainable relationship by formalizing some of these relationships, building contracts in the relationships, and ensuring that each party or each actor along the value chain plays to the game to encourage the smallholder to pass on its produce along the chain till it gets to the final consumer. Another area that is worth considering is what came about because of the lockdown. When there was a lockdown, it became clear that although agri was one of the essential areas, there wasn't a clear understanding of what to do and what not to do. So transportation was impacted. I have a small farm back home. It took me about a week to get my seeds. What this means is it impacts on your production calendar. But that is not all. The COVID-19 has taught us that we can do business in a different way. So one of the opportunities that the COVID-19 has brought about is the growth in e-commerce and digital technology. So if you are an agri-SME, one of the things you should be thinking through now, or the areas you should be focusing on, is how can I use, for example, social media to get my produce from my warehouse to the final consumer. We've seen the likes of Uber develop Uber Eats. So you can be in the comfort of your home and order for food. I think these are opportunities that agri-SMEs should also be considering. Beyond that, you can, if you are on a large scale, tap into the likes of FedEx and DHL to be able to move your produce from your farm gate to the off-taker. Again, one thing that COVID-19 has brought about is import substitution. So for countries like Ghana that will import some produce at a high cost, with the lockdown and the impact of COVID-19, what that meant is either the produce delayed or you didn't get it at all. What does that mean for a local producer? It opens up opportunity for local farmers, local producers, agri-SMEs in Ghana to be able to produce and produce more. That is not all. I take an example of what happened in Tanzania. In Tanzania, they were importing palm oil. However, when COVID-19 came about and borders were locked, what did they do? They started to substitute the palm oil with sunflower oil. So in Ghana, if we are impacted because we cannot get some produce, then I submit that it is an opportunity for local producers to step up to be able to do this and do it profitably. But in doing this, they will need capital. And this is where financial institutions and commercial banks must step up to the plate to be able to support and do more. Finally, we all agree around the table, and I have mentioned earlier, that as a result of COVID-19, the already bad situation around credit has been worsened because farmers lost contracts, there was lack of confidence in the market, and so it led to credit tightening. When there is credit tightening, I agree with Professor Bobby that government must step up to the plate and bolster commercial banks improve lending to the agri sector. So government must do more by bringing about more risk sharing mechanisms. Prof has already spoken about it, and I agree that there must be a relax to the regulatory requirements. I submit humbly that the current regulatory requirements, and this is not our Ghana alone, generally in sub-Saharan Africa, is inimical to agricultural finance and agricultural growth. So long as banks continue to depend on short-term funds, it will be difficult to pass on these short-term funds to agriculture. Agriculture needs long-term funds and at a lower cost, and Prof has spoken about that. I think government must also go a step further to encourage the adoption of fintech models to be able to democratize financing channels so that smallholder farmers in Zuarungu, in Tumu, Binduri, and Garu Timpani can be able to access financing through these channels, although the bank may not have a physical presence there. And I know the government of Ghana has done some direct interventions uh, in the sector and in agri, but in a pandemic situation, government needs to go a bit further and do more, like reducing tax for agricultural SMEs, reducing tax for individuals in the economy, in addition to what they have done so far. Agri SMEs are vital to agricultural markets. They facilitate trade, they create employment, and they enable food security. We therefore, as a country, must invest in maintaining their linkage, increase their liquidity, and support their agility to enable them sustain shocks from pandemics like COVID-19. Thank you, thank you, thank you.
So thank you very much, Mr. Anku. Uh, we've gotten to a point where we have to be more interactive. So I would like to plead, if you have a question before I start reading the two questions I have taken note of. Those questions are directly meant for Professor Bocking. But if you have a question, please unmute your microphone and ask the questions directly so that you can have answers.
Good morning. My name is Isaac Aqua. Thank you very much for this. It was very informative and very interesting. You mentioned agri-tech solutions. I know a lot of startups and tech startups are looking to create different solutions, but how would you say it's best rolled out? Like with both the stakeholders, which tend to be non-technical, like the farmers at hand, and they can't also work in a bubble, so they have to work with different stakeholders, whether it's input providers, logistics, local government. How best can tech entrepreneurs partner with these existing players to roll out their tech?
My name is Stephen Iwu. I represent Farrelly and Michel, global consultants in Sub-Saharan Africa, based in the Accra office of the company. The presentations are very insightful. Thank you, Andrew. Thanks to Prof. I had the privilege to listen to their presentations. My submission is about how we can bring in the private equity investors into this whole game of agribusiness development in Sub-Saharan Africa. Because I'm looking at the situation where, depending on the level of a business development in terms of finance needs, taking a loan of with an interest rate of, let's say, about 25% per annum or 30% per annum, depending on the quantum of investment needed, some businesses can be able to stand that. But then for those at the end, getting to the top end of the value chain, you agree with me that most of them need huge investments, and these guys would sometimes, be open to private equity investment which comes in with some kind of level of breathing space, where the businesses can take huge loans or huge investments, and which also comes with flexible terms of payment and flexible interest sometimes. So I'm thinking that we should be able to find ways and means to bring in the private equity segment of agribusiness financing into the general broader agricultural value chain development in sub-Saharan Africa. How can we integrate that segment into this space? That is my question.
Please, I just have a question. Actually, this is directed to Prof. Just a question that was came up earlier on in the discussion. You mentioned that during this COVID-19 period, there are some companies or some sectors that are making it and some that are not making it. And I think there was an allusion made that those who are doing well in this pandemic should be subsidizing those companies who are suffering, I would say, in this pandemic. And I just wanted to understand this, because clearly those companies who are doing well are doing something to add value to the society, I guess, and the institutions out there who need their service, like we've spoken about digitization and things like this. But why should those who are innovative subsidize those who are less innovative to some extent, or to some extent maybe stuck in the old way of doing things? So I just wanted a bit of insight on that, please.